Hi, Darren Mangum here, securities lawyer with the law firm of Mangum and Associates. Thanks for watching my YouTube channel. Um, Today, I wanted to talk about private equity and share some examples of how private equity would work in the context of a private placement or a like either under Regulation D or under regulation crowdfunding. I've got two examples that I wanted to highlight today. One is one is an example of a private fund that is investing in a pre-IPO company. When I say pre-IPO, there's no guarantee that this company will ever IPO, even though it has a lot of publicity. This is well, I guess I can give it away. SpaceX, right? SpaceX is a very exciting company, one of Elon Musk's flagship companies, and obviously it's still a private company. Lots of buzz about it. You know, it's obviously one of the leaders in the in the space race. Has a lot of government contracts, a lot going for it, right? It's always in the news. Anyway, I wanted to share an example of how would you invest in SpaceX? Because SpaceX, a lot of time, it's done some private rounds of capital, but it doesn't, obviously it's not, you can't just call up your broker and say, I think I'd like to buy some shares of SpaceX, right? Because it's not a public company, right? It's a private company. So, so this is this one example. It's again conducted under Rule 506C, where they put together a fund just for accredited investors, and because it's 506C, they were able to advertise the offering. And I'm not promoting this company. I'm not an investor in this company. They're not a client of ours. I just saw it as hey, this is a great example of somebody that is using 506C to put together a private fund to invest in SpaceX stock. Now, is it the same thing as investing directly into SpaceX? No, it's not. It's a separate fund that has the intention of buying stock in SpaceX in the event that they go public, right? So they're positioning themselves with a pool of capital. And again, maybe it never goes public, right? Or maybe they get to participate in some, again, future series. What series are they on? Series C, Series D, private equity round? I don't know. I mean, it's again, with private offerings, unless they're putting something out there, hey, we're raising capital, you just, would probably never know about it, right? Until after it happens, they announce, hey, we just closed another $1 billion seed round or whatever it is, right? So, but anyway, this is a unique, a way, and again, there is, it's not the same thing as owning directly shares of SpaceX, although they have the intention is once they do acquire the stock and the holding periods is satisfied, eventually distributing the stock to all the investors or selling the stock possibly and distributing the profits, right? It's not the same thing. I mean, there is a front end. I mean, there is a carry on it. When I say carry, it means that the syndicators or the partners, they've added in a 20% carry, meaning 80%. So you're buying the stock, or you're buying the interest in the fund, who will then buy the stock, and it's an 80-20 split, right? 80% goes to the investor, and 20% would go to the promoters, right? Now, if the company goes public and it goes double, triple, who cares, right? Happy to share the wealth, right? Because they put together a vehicle to enable you to get in, right? Get in early, right? Instead of waiting around to buy it on the open market, right? So, but maybe if the shares just trade at par, or sometimes you see a company that goes public and and it goes below par, right, or below the IPO price, and still you got this 20% carry. Again, it's not without risk, right? But again, it's just an example. I thought it was a great example of somebody using Rule 506C to put together a private equity fund to make it available to investors. This other example, again, I have no interest in these companies. I'm just sort of like, following it just like anybody else. They're not clients of ours. I'm not an investor, have no interest. But here's another. This other example. It's actually listed on Republic. Republic is a crowdfunding portal, and here's it's an offering that is a soccer team in Orange County soccer team in I believe that's in Orange County, California, but it's an opportunity to buy an ownership of the soccer team, right? And so you think about it, well, for soccer fans out there, wow, wouldn't it be great to own a piece of the soccer team or really it could be any sport, any like, let's pick your favorite sport, Houston Astros, New York Yankees, whatever, right? I mean, he thought, oh, wouldn't it be great instead of all these billionaires own these teams? Hey, wouldn't it be great to own a piece of the team, right? And so some sports teams have gone to regulation crowdfunding and said, hey, obviously they're not going to sell the entire team, but they'll say, hey, we'll maybe carve off a small piece of the team or ownership, and then offer it to the fans, right? And the fans can then own a piece of the team, and benefit from the future value of the team, and it's just another way to. I mean, again, it's a way to also to raise capital. If a soccer team is like, hey, we need another $5-10 million in working capital, whatever. Maybe we open up a regulation crowdfunding round that helps raise that capital, and also we're sharing ownership of the team, right? I mean, again, it's just another creative example of how the securities rules, again, Regulation D, regulation crowdfunding can be used to again, raise capital, number one, and also, again, bring other people along for the ride, and especially in this soccer example. And so, whatever project you have working on, you can certainly consider, hey, you know what, if we need working capital, we can possibly look at one of these tools to do so. And if nothing else, hey, reward some of your customers or your fans. Hey, maybe offering some ownership interest in these ventures, right? So anyway, just some great examples. Again, if you have a project that we could possibly help on, or be glad to hop on a call with you, no obligation, introductory call to explore maybe the ins and outs, the pros and cons of doing raising capital this way. Again, if this content is helpful for you, feel free to like, share, and subscribe. And again, thanks for watching, and we'll see you on the next video.